Welcome to today's 24-hour global financial update. Today's focus: weak U.S. employment data pushes the probability of a Fed rate cut in September close to 100%. U.S. non-farm payrolls increased by only 22,000 in August, far below expectations. The unemployment rate rose to 4.3%, the highest since 2021. The market expects a 99.4% probability of a 25 basis point rate cut by the Federal Reserve in September, making a cut almost certain. U.S. Treasury Secretary Besant published a rare op-ed targeting the Federal Reserve, mentioning moderate long-term interest rates for the first time. This is interpreted as the Trump administration's intention to lower long-term rates, potentially paving the way for restarting QE and other policies. This is bearish for the U.S. dollar and bullish for gold and equities. OPEC Plus announced a further production increase of 137,000 barrels per day in October. Saudi Arabia has shifted focus to restoring output rather than pursuing high oil prices. Nobel Laureate Stiglitz warned that the market is underestimating U.S. fiscal risks. He said Trump's tariff policies could impact corporate supply chains and fiscal revenues. Now to the market movements. All three major U.S. stock indexes fell. The Dow dropped 4.8%, the S&P 500 fell 3.2%, and the Nasdaq edged down. Tech stocks were mixed. Broadcom surged 9.4% on strong AI prospects, while Nvidia and Supermicro plunged. Gold hit another record high. U.S. Treasury yields fell to a 4-month low, and the dollar index dropped below 98. Key events to watch today. The U.S. labor market shows weakness in both supply and demand, paving the way for a Fed rate cut and increasing concerns about economic recession. This week, focus will be on U.S. CPI and PPI data, China's inflation, trade, and credit data, as well as the iPhone 17 launch event. Thank you for watching today's market news. If our information is helpful to you, please hit the like button and follow for daily global market insights. We'll see you next time.